Hello everybody and welcome to the market briefing for the weekend, this long weekend. Today is Monday, September the 5th. Let's get right into this. So everything we do here is for educational purposes only. We are not investment advisors and not providing investment advice. All statements made here today are my own personal opinions and not to be considered advice to buy or sell any security. And all trading and investment decisions are your own and done at your own risk. All right, glad we got that out of the way. Let's take a look at what is going on. So today's Monday. It's a holiday in North America. It's Labor Day. Hope everybody's enjoying their long weekend. I have been having a great long weekend, and that continues today. It's still fairly early here in Vancouver, and as soon as I get this done and posted, I'm going out sailing with some buddies. So should be a fun day. So today's holiday, nothing, futures markets in North America are open, shorter hours, but open nonetheless, so we can get a kind of a hint of what's going on there. Global markets are open, of course. And the big macro event today, there's actually been a lot of sort of macro events over the weekend, all to do with energy. And so the big one today is OPEC meetings. And I'll just tell you right now that they have decided to cut production for October by 100,000 barrels. It's a pretty small cut, and I'm not surprised, and I don't think the market is too surprised either. I think they've drawn a line in the sand on where they want the price to be, and I'm pretty sure that they want the price of oil to be above $85 and even higher probably. We've got a small cut in oil, and oil futures are up today on this news, but not a ton. We will look at oil in a few minutes more closely, and that's really where all the action is right now. We're going to blast through all the other sectors because I think that energy is really the only sector we need to be watching this week. All right, so on Tuesday, we have the ISM Services PMI. PMI stands for Purchasing Managers Index. Last week we had the manufacturing PMI, and that is a really good indicator of the direction of inflation, and that came down nicely. And actually, it's come down. The last couple of reports on the manufacturing PMI have come down, and that has always led inflation lower. So it's good to see that manufacturing PMI coming down. And services, the services PMI is very closely related as well. So we would like to see this come down too. So if we see a nice drop in the services PMI, that might give us a little bump in the markets. The rest of the week, though, there's really not much. There are no economic reports. It's kind of a slow week. It's still, a lot of Wall Street is still going to be away this week. It's still going to be a little quiet. It's probably going to be choppy, because we don't have all the traders at their desks. We don't have all the analysts at their desks. The institutions aren't at full strength yet. They will be the week after this, though. Coming next Monday, a week from today, that's when we really get back to full strength in the markets and on Wall Street. And we'll really see some... I think better price action because, last week everything was just so choppy. We did come down, obviously, which isn't great, but there was a lot of chop in there, too. And whether you were playing long or short, you probably got chopped up if you were playing last week. Okay, so Wednesday, we've got a bunch of Fed speak. FOMC members, making speeches, talking at various events. There's quite a few of them on Wednesday. And no real economic or macro events other than that. On Thursday, Jay Powell is speaking at the Cato Institute's annual monetary conference. So we know what happened the last time he did a big speech somewhere. Let's hope we don't see more of the same. Maybe now that he's knocked markets down a little bit, maybe he'll get a little dovish this time. Maybe we'll get to see, Happy Powell. Because last time we did not see Happy Powell. So that'll be interesting. We'll have to watch this closely on Thursday and see which Jay Powell we get. On Friday, there's a lot more Fed members speaking here and there. So as you can see, as we go through the week here, it's really all about the Fed, and you know how choppy that can make markets. So don't expect much out of this week, other than chop. All right, so for earnings, it's getting lighter and lighter on earnings. I don't see anything that really interests me on Tuesday. Maybe after the close, Coupa, but that's about it. NEO should be interesting on Wednesday morning, though. I think that a lot of people will be watching that. GameStop, of course. There'll be plenty of people watching GameStop on Wednesday after the close. Thursday before the open, kind of meh. Fuel cell is interesting, but it doesn't really lead. I think that the EVs themselves, EV companies, Tesla, of course, lead all these kind of alternate energy companies to a degree. On Thursday after the close, we have DocuSign, that will be closely watched, and Zscaler, which I think will be closely watched as well. And that's about it, really, that's interesting for the rest of the week. So, why don't we take a look at our markets? We'll have a lot of charts to go through, of course. We're going to look at the major indices. We're going to look at important commodities. Guess which the important commodity is. We're going to look at some sectors, and we'll see if there's any nice setups. And I'll just tell you now that the only nice setups really are going to be in the energy sector. Okay, whoops, didn't mean to go there. Let's go back to this, our chart of SPY, where we always start. So this is the S&P 500, the ETF that tracks the S&P 500. And you can see in the last week we have come down quite a bit. We closed out the week before right at this really important support level, right at the important support level there, right on top of the 100-day, or right at the 100-day moving average, and then we continued to fall through the week. Tried to bounce on Thursday, or did have a bounce on Thursday actually, after touching this 390 level, this important support level at 390, which is also where the 61.8 retracement of our rally was. Now, after falling through the 50% retracement, I was a little surprised. I was really hoping that this 50% retracement would hold this week. It did not. That's generally not a good sign. We came down. We hit the 618 retracement. We also have a trend line there. And thanks to Jerry in the Discord for pointing that out. And we bounced nicely on that. We gapped up strongly on Friday, and then we're weak all of the day until we bounced again off that trend line and that 618 retracement and that 390 support level. So this obviously is a very important area. We want to see this hold, and I think that maybe we need to, to show the importance of this level. I think we can now switch this to our major line. Make that line thicker there, just to sort of denote how much, how important it is that we hold this level. Now, I can tell you, because the future markets have been open, we've got a little bit of a bounce going. So if we move over and look at the ES futures, you can see I don't have any of the lines drawn in this because I don't look at these that much, but you can see we've had a little bit of a bounce in the futures, and right on that trend line as well. So that trend line continues to hold. Holding quite nicely. If that breaks, not going to be good, right? So our upside, obviously, we have a bunch of resistance overhead. If we do get a rally this week, I don't expect it to be terribly strong. I think we're going to need to consolidate in this zone for a while before breaking higher. And certainly this week, if we are going to break higher, I really don't think it'll happen until everybody's back at work, the week after next. So we want to see us hold this trend line. There's a good shot that we just chop around in here this week. There's also a strong possibility that this trend line breaks, these support levels here break, and we continue lower. The next sort of natural area of support would be at 380. And basically, about every $10 on the way down. You can see we've got another support level here at around 370. And then we start looking at this all-time low, or not, sorry, not all-time low, but this low, from the summer, which is the low of the bear market so far. I don't think we're going to go get there. A lot of people think we're going to test this, and I just don't think we get back there. But I don't think this week is going to be great either. I think there is potentially a lot of trouble ahead this week, and I think this is a good week to just be really careful and maybe even just be completely hands off, and just let this week play out. Take another week off if you have been laying back, and then come back at the end of next week and see how things look going into the following week. All right, so let's look at the Qs. Pretty much the same thing, right? We've got that trend line, except that, I'm going to delete out this cup and handle. We're still, this cup and handle is still potentially active in here, but this handle is just getting really deep. And I think that, we're all aware that this looks like a big cup. I don't think we need these big orange lines for it anymore. I think they're just sort of confusing things a little bit. I think the more important levels right now are that 618 retracement where we have bounced. These, little bit of a pivot level below that if this breaks down. But really, if the Qs break down, I think that this is going to have an easier time of testing these lows from earlier in the summer. You can see that same trend line, the trend line is formed by the same two lows on the Qs, did break on Thursday on that gap down. And when we tried to go back up through it, we found resistance there and then pulled back. So that's not a great sign. That's not terribly healthy right there. Let's take a look at IWM. Same thing, we've been watching this cup and handle. I think I'll just leave that one there for now, though. The pullback here hasn't been quite as deep as it was on the Qs. This is an area where we should probably find some support. I should actually get that line in there. That comes off this sort of little consolidation zone in here. As you can see, it's supported over here as well, and is now supporting here too in the last couple of days. So this is an area, a natural area for us to expect some support. Let's take a look at let's put the Fibonacci on here like we did on the other ones as well and see if that is showing us anything. And sure enough, the 618 Fibonacci is there too. So we have reasons to believe that this support will hold, but that also means that if the support breaks, it probably moves down fairly quick into the next level, which is probably going to be at this former gap area and this pivot down in here. So it could be a fairly rapid move down there. All right, let's move over to the VIX, the volatility index. And we can see that this is consolidating. This is really interesting, though, this price action on Thursday. Now, you can see that, we had that uptrend line in the VIX, and we also had a downtrend. So we had basically this pennant. It fell out the bottom of the pennant, and it got right back in there, right? And now we're consolidating, above that former trend line. And you can see on Thursday, we had this... what is it? Long-legged doji or dragonfly doji. We had this dragonfly doji here, where the VIX really just kind of puked itself. Came down through the 50-day moving average, tagged that trend line, and then went right back up. So it was looking good when VIX was down here on Thursday. It was looking really good for this may be the turn here. Maybe this little pullback we're having is over. But no, sure enough, VIX went back up and is still in this consolidation and drawing really what is basically a bull flag for VIX, which we have to consider a bear flag for our overall markets, right? We do not want to see that breakout to the breakout above. If this does break out to the upside here, well, we're going to go and test. We're going to get up into the 30s and test this trend line, and that's not going to be that's not going to be great for the markets. But if all these indices break down through support here and start coming down to here, they probably will move fairly quickly, and we will see VIX rise quickly. So if you believe that that's what's going to happen, a good hedge for you could be a play on VIX, long VIX. So that might be, long VXX, that might be long, calls on VXX or something like that, or one of the levered products on VXX or on volatility. All right, what else we got? We got, let's look at the 10-year yield. So this is still climbing. Interestingly, this came down. It did gap up strongly on Thursday, and this is starting to be a little bit of an odd sort of divergent price action, right? We had this big gap up on Thursday. Let's get this gap drawn in here because it looks like it's going to want to fill. It should actually get that gap down there too, because if we do start coming down, that could act as support. All right, so you can see that gap now. We sort of partially filled that gap. But interestingly, it gaps up Thursday, and Thursday was the day in the indices that was green, right? And then this moved down on Friday, and the indices were down on Friday. So that's sort of divergent price action behavior there. So it'll be interesting to see how that plays out. The other one we want to look at is the dollar index. Let's look over there, the dollar index, and you can see that on, let's see what day. Yeah, okay, this last candle was yesterday, okay, because currency markets were open, or sorry, today I mean. This big green candle is Thursday's candle. And this little doji here, another almost dragonfly doji on there, was on Friday. But the point here is that the dollar index is moving up sharply, obeying this really accelerated trend line and continuing to move up. Now, we are seeing some selling wicks on these candles, right? These wicks above the open and close. We call those selling wicks, and that is somewhat bearish. That's a sign that we're running out of momentum and that we potentially roll over. That would be great, because equities are going to continue to have a problem, and global markets are going to continue to have a problem as long as the dollar index is continuing to rise at this pace. We really want to see this dollar index roll over. And you got to remember, most of this dollar index is made up of the euro. The euro is the major component there, and the euro is going down so sharply because of all of their energy troubles and inflation troubles that they're having. So we're seeing a kind of a picture here, a bit of a mess globally, and the global macro is a bit of a mess. And it'd be really nice if this starts to kind of settle down and resolve itself. But I think that's going to take some time yet. All right, let's look at our DCA, because we've got some interesting action here as well. Our dollar cost averaging signals, you can see, have turned red this week because price broke below the 20-week moving average. All right. So, if you are dollar cost averaging, you probably want to back off from that system at the moment. Put your dollar cost averaging on hold if you've got any upcoming. However, this is just the first of a two-part signal, right? Because it really doesn't go fully red until we get to sort of this darker red line here, and that happens when the MACD signal crosses over or crosses to below the signal line, which is that orange line there. That's when this signal, that's when that fully turns off for us. But this really right now is an early warning sign to back away from your dollar cost averaging. And so this is, we've got the signal in the SPY, we have the signal in the Qs, and we also have the same signal in IWM. So they're all confirming each other. And yeah, I think, like I said earlier, right, this is probably a good week to just kind of back away, sit on your hands a little bit, and just let things settle down and see what happens. Okay, so that is it for that. We're going to move into our commodities now. There's nothing really going on in gold. I'm not going to spend any time on that here. Nothing really going on there at all. Copper futures. Remember, copper is a big industrial metal. It's important to the economy. It's a sign of the healthy economy. This pulled back sharply over the last week or so. But downward momentum has slowed, and you see on Friday, or is this today? Oh, this is today's candle, sorry, because these are copper futures. We seem to be bouncing, so that's good. This is potentially good for equities here with copper bouncing. If we look at our DBC, the overall commodities ETF, you can see that we have, we've been forming this upward channel with the top of the channel the bottom of the channel being the 200-day moving average, and the top of the channel is kind of, the 100-day moving average. It's starting to squeeze between there now. And you can see we're right at the bottom of the channel. Now, if you're a mean reversion player, you're probably buying DBC here, expecting this to move back to the top of the channel, where you would sell it. So if you like mean reversion, this could probably be a half decent play for you. Although, between the top and bottom of the channel really is only about 10%. So it's not a huge move, but you can make a bit of money in there. And that is not investment advice, by the way. I mean, I'm just, if you're a mean reversion player, you know what to do. DBA, the agricultural commodities ETF, kind of got the same thing going on, right? We've got a nice upward channel here, a little steeper upward channel, and we're just now potentially bouncing off the bottom of that channel. But this one, though, you can see that these moves up are getting smaller, or at least the last one did, right? And it couldn't get through that 200-day moving average and continue to the top of the channel. So is momentum in this channel slowing? It kind of looks like it might be. All right, let's move on to the big one, the big important thing, probably where we're going to spend most of our time today. So if you hate energy, if you want nothing to do with oil and natural gas and some of the other alternative energies, you might want to just skip this whole section. Okay, so over the weekend, earlier in the weekend, or actually let's back up to last week. Around the middle of last week, early last week, Gazprom, the Russian oil and gas company that ships all the natural gas to Europe, they shut down the Nord Stream 1 pipeline for maintenance. That sort of thing happens all the time. It was scheduled. That's normal, nothing to worry about, right? Except with all this stuff that's going on with Russia, everybody was worried that they wouldn't turn the gas back on, that they would come up with some excuse not to turn it back on. Well, on Saturday morning, sure enough, they said, oops, we found some problems. We can't turn this pipeline back on, and because of sanctions, we don't know when we're going to be able to repair the issues that we found. And so the pipeline is shut down indefinitely. So this particular pipeline ships, I think it's about 20% of Germany's gas supplies from Russia, or Germany's gas supplies. There's another 20% still coming through different pipelines and whatnot, and still coming from Russia. But this particular pipe down is it's a lot of the Russian gas that makes its way into Europe. So this is a problem, but it's a problem I think the market has seen coming. And what's really interesting today is that natural gas is actually pulling back. Now, the natural gas we're looking at here, this is U.S. natural gas. This is not the European futures on natural gas. I should probably actually figure out which. I should probably see if I can get a chart on the European natural gas futures. But anyway, the U.S. natural gas futures are coming down today. They were down on Friday a bit. They're still up near, consolidating up near that resistance zone. But, with these moves down, we probably need to extend our consolidation zone down a little bit here and, see if we can hold in that range. So I'm not getting bearish. I mean, this is slightly bearish action. This does look like it's rolling over. I don't think it's going to come down too far. I'm not terribly bearish on this yet, and I still think there's a chance that this goes up and breaks through the upside of this consolidation here. But you know, there's a lot that's playing out, and there's a lot that's already been priced in. Europe is basically saying that, or most of Europe is saying that they've got this all under control, that they've got, you know, their storage is almost full, and they're going to be fine through the winter. They're putting a brave face on this, but I think there's a lot more bad news to come out of this energy sector, especially when it comes to Europe. Okay, so let's go back over. So that's natural gas. We go back over to oil. Okay, and remember I mentioned earlier that OPEC today said that they are going to cut production by 100,000 barrels a day. And let's look at the dates here. Okay, so this little candle here is not telling me the truth, I don't think. I don't know. I'm seeing that oil's up 2.5% today. Oh, that's gold. Sorry. That looks better. That's the kind of candle I'm looking for. Okay. So yeah, you can see we've got a nice green candle today, you know, that we had rolled over, and it looks like we're starting to move back up. A little bit of a selling wick on here, but the important thing is, you know, we've got this major support level, this 85 level. I think is OPEC's line in the sand, and I think that they saw it coming back in on this level, and that's why they've cut production a little bit to bring the price back up. I think they're going to be much happier when they see oil above this 95 level. So we'll have to see. Does this little cut take oil above 95, and will they just hold production at their next meeting above that level? And if it does take us above 95, how far does it take us? I don't think it's going to take us very far, and I don't think OPEC really wants to see it go above 100, because that's when the rest of the world starts getting really grumpy, and you know, screaming at them to increase production. So I think that we're going to be in this range on oil, you know, between 85 or 90 and 100 is a range that we're going to be in for a while. So that's oil. Now, all of this should be good news for, you know, the energy sector entirely, right? And especially, you know, I'm still bullish. And when I say we're going to be between, you know, 85 and 100 for a while, I think that's the, you know, moving into the winter and perhaps past the election, the midterm elections in the U.S. coming up the beginning of November, right? So now that's only now 2 months away, these elections. Once we get past those elections, Biden is going to have to start refilling the strategic, the SPR, the Strategic Petroleum Reserve, because it's running out of oil. You know, he's going to be continuing to drain it into the election, trying to keep gas prices down. But at some point, they're going to have to start filling it. And when they start filling it, that's when we're really going to see the price of oil move up and probably go up and test, you know, up into this 120 and these highs that we saw earlier in the year. And that's what my energy plays. That's the thesis for my energy plays, and that's why I'm sort of very intermediate term and through the winter on these plays, because I think it's going to be a long, cold winter for energy. So let's look at XLE, the overall energy sector ETF, and we can see we kind of broke this trend line that we had been playing around with. Broke down through it, but have bounced up fairly quickly. Let's see, we closed that gap now, so we can get rid of that. I think we continue higher here, obviously, because you all know that I am bullish on energy. And there's a little support level in here. We should actually drag this line over a little bit, extend that across, because that might come into play again. XOP, the oil exploration and production companies. Trend line on these ones is, holding nicely. Actually, I think I redrew this trend line down a little lower. I think it might have broken, but I mean, this is a nice looking trend line here. We've come down to the 21-day moving average, basically bounced off it. It looks like we're going to move higher tomorrow. The oil services ETF. This one had good relative strength on Friday. It's come into an area that could be resistance. You can see the 200-day moving average there. We've got the 21-day moving average there, and the these previous pivots, right? As long as oil is as high as it is tomorrow morning, this will gap up and break through this level. So there might be a nice little play here. If oil continues higher tomorrow, this one will probably attract enough traders on this breakout that it will probably quite easily move up into at least to this 100-day moving average and maybe up into this little clusters of highs right here. So yeah, there's a potential move here in this ETF, and that's the oil services ETF, OIH. We looked at gas. Let's look at Magnolia. This is one of the energy companies we've been watching. This had quite a pullback, broke through its trend line. Not a very happy move that it had here over the last week. But it did have a nice gap up on Friday, and I would be shocked if this didn't gap up into this area, certainly above Friday's high, and that 21-day moving average. That's where I'd expect to see an open on tomorrow, and then probably continue higher if oil continues higher. EQNR, the Norwegian oil and gas company that we have been playing, it also broke down a little bit last week. Tried to find support at its trend line. It broke through this fairly important support level here, or support area, but it started to consolidate in there, and I like the look of this consolidation. And I think that this moves higher tomorrow. What else we got? Let's look at TAN, the solar ETF. This did not have a great day on Friday. This has had all sorts of opportunity to move higher. We had a little bit of a trend line here, which we broke through and then couldn't get back through. This does look like it's heading lower, and it really looks like it wants to close this gap. But given what's going on with energy, I just don't get it. I would be surprised if this heads lower. The chart is telling me it's heading lower, but what I know about energy and what's going on, all the macro in energy, is telling me that why is solar going down? People should be embracing solar. There should be lots of new solar projects being talked about. But there you have it. Let's look at FSLR. Is one of the leading solar companies, and you can see that this is up near, I believe this is all-time highs. Yeah, pretty much. We've got a nice little bit of a bull flag. This has been stair-stepping higher. So obviously there is trouble somewhere in the solar sector, but it's certainly not in this stock. So this is one that we should maybe keep our eyes on. It's hard to buy it up here when the sector itself is really not behaving properly. But the truth is in this chart. This has got a nice uptrend going, and a breakout to the upside here should continue higher. Not without its risks, though, obviously. So that was TAN and FSLR. Let's look at uranium really quick. Uranium's been chopping around a bit, but this is another one kind of similar to TAN, where the overall ETF is not doing great. It's getting. I guess what's going on is some of the smaller companies in these ETFs are probably getting hit by the risk-off tone in the market, but some of the bigger companies and the better companies, stronger companies, are still being bought. And so we can see that in this ETF as well, where we've sort of pulled back, but there is still some strength in there. And a lot of that strength is in Cameco, the big company in here. And we've got a nice little bull flag going on here, and this looks like it potentially makes a move higher. So could be watching this for a play this week. All right, that is it for the energy sector. We'll move on to the rest of the sectors, but there's really not much to see. There's a lot of messy chop. You know, we're going to see a lot of moves down to 50-day moving averages and attempted bounces at 50-day moving averages that are potentially failing. Okay, so this is consumer discretionary here. Not looking great. We probably even need to get a downtrend line drawn in here because that may be in play. We'll want to see this, you know, come and break through this downtrend line. We'll get rid of this gap fill because it did fill that gap, you know. So there's one reason it could bounce, but you know, there's not a lot of support here other than this candle on Friday. We do not want to see it break below the low of that Friday, or not Friday, sorry, Thursday. Not want to see it break below the low of Thursday's candle. And we're going to see a lot of charts that looks like this, I think. We'll look at industrials now. Same idea, right? Big move down. I mean, this was one of our sort of stronger sectors, and it was making nice move, nice stair step up. And when this rolled over, it rolled over pretty hard. Now we're trying to hold these lows from Thursday and Friday. It'll be important to hold these. If we don't, our next level I think is probably 90. Get that drawn in. Sorry, that's 88. I like it better up here at around 90. Oops, there's 90, sorry. Got it, alright, yeah, right in around there at 90. If we come down, probably get a bit of a bounce or consolidation there. Financials, not thrilled about the price action here. You can see it looks the same, you know, almost identical to what was going on in consumer discretionaries. You know, we're at levels that really have got to hold, or we're going to test these lows from earlier in this bear market. Technology, quite weak over the last week. Really pulled back over the last couple of weeks. You know, trying to draw a line in the sand here, right? You know, there is some support lower. I don't know. I'm seeing sort of, I guess we've got a support zone in here, but I'm not holding a lot of hope that holds if we go and test it anymore. It's the kind of thing that really needs to turn up right away, because any support that's here could break really easily and then continue lower down into this sort of 125 area. Communications is looking even worse. We are down at these support levels that really, really need to hold. You can see here, I guess I better get this pivot drawn in here because it's probably coming into play. So that is our low at 52.73. That's our low from the bear market. Okay, we're not that far from there. And coming in and testing there and breaking through there would not be good. So let's look at our FAANGs. We'll start with Apple, and you can see we've had quite the rollover in Apple. Once this trend line, I mean, this is a beautiful trend line. Apple was kind of in a world of its own here. This has really started to roll over now. And support's not really holding. We've got the 100-day moving average here as a level of support. Probably got some support off of this, from that pivot right there. Was that 152? Let's get that drawn in. Oops, I want that as a pivot. There we go. This 152 area is an area that we can look to for support. Beyond that, maybe there's something in around 150. So that's what we've got coming up on Apple. We really want to see this turn back up, like everything. Otherwise we're coming in to test some lows on things that we really don't want to test. Let's take a look at Amazon. So Amazon has almost completely filled this big gap that it had back in July. Sort of to turn up nicely here. You can see it tagged, almost perfectly tagged and turned on the 100-day moving average. And it held up reasonably well on Friday. It was just barely red on Friday. So that's a little hopeful for Amazon and really for the rest of this sort of tech sector. Meta is just Meta. Coming down to test the bottom of this consolidation range still. I suspect we're going to be in this. Actually, that's the old one. Let's draw. I suspect we're going to be in this range a lot longer. Now, the question is, if this comes down lower, does it bounce off the bottom of this range and continue up like it has every other time, or does it break down and through? And if this breaks down and through, it's probably going to have a big move to the downside. It's going to catch a lot of people short here, I think, or sort of catch people offside and move lower. If this does bounce off here, the big question is, does it continue all the way up into the top of this range? Or does it only go halfway? And you can see where, we had this lower range before, right? Does it just move up into here and then roll over again? That'll kind of tell us what's going to happen in the future of this, I think. If we can continue up into the top of this range, then maybe we have a shot of consolidating up in here in the top half of this range. Then we could, maybe be looking for a breakout higher. But for now, I think we have to be ready for Meta to go sideways for much longer. All right, Netflix. Netflix, continues to be kind of our outperformer now. It's outperforming by going sideways, but it's not really going down. So I still continue to be kind of bullish on Netflix, but it certainly seems like we have more sideways. So let's expand this range we've been working with, and we also need to lower it a little bit. Unfortunately, the range, the width of the range has expanded a little bit. That's generally not ideal. We'd like to see the width of the range narrow when we're expecting and wanting to play a breakout. But this breakout I've been talking about, potential breakout on here, is still here and still playable in my opinion, although there's more risk in it now because this range has expanded. But worth keeping an eye on nonetheless. And one last point on this, I might not be willing to play this if it breaks out this week. I just think we're going to have a lot of chop this week, and I don't want to be chopped up in the blender. I've had plenty of that over the this whole year. Getting chopped up trying to play breakouts and whatnot that just fail within a day or two. So I'm a little gun shy on this one, at least for this week. If this was to do more sideways, and especially this range tightened up a little bit and broke out next week, I'd be all over that. All right, what do we got for Google? So the Google, we've got, I just called this the Google. Sorry, I didn't mean to do that. That sounds weird. Google has this nice little sort of slightly upward sloping range going on, but you can see it broke down below the upper portion of that this week. It's putting in a bull flag here, really. Sorry, not a bull flag, a bear flag here, which is not ideal. But we still got this lower trend line, and I think this has got a pretty decent chance of bouncing off the lower trend line if it comes down to it. And this is another one for you mean reversion traders out there. If it comes down here and bounces off this lower trend line, that could be a really nice mean reversion trade, because we would expect that, just like it has many other times, to move all the way back up to the top of that range. And that is a decent move. That's, what do we got? Sort of, from down in here, say you get it at $1.06, $1.07, goes all the way up to 124 maybe. That's a pretty decent little move there for a mean reversion trader. Okay, Tesla was kind of meh. It's just sort of, it has rolled over. It's a little choppy. Might be bouncing here. Had a bit of a hammer though, but it closed below the low on that hammer, so that's not ideal. I think a test of this this 250 to 260 zone is probably in the cards for Tesla. Maybe even this, let's get this gap drawn in here. there was this gap down here from way back in, that would have been July, yeah. So there should be a half decent support zone right there if Tesla comes down. Semiconductors have had a rough week, you know, with all the stuff going on with NVDA and everything. Drew a really nice hammer on Thursday and gapped right up, filled the gap, right, and then just fell off a cliff again. Fairly, you know, this is sort of the story of my life with semiconductors. They just don't seem to be able to really hold. They have these big moves that are, you know, big enough to stop you out when you don't really want to be stopped out, right? And just can't seem to really hold a sustained move for the last while. NVIDIA is the one that made everything kind of fall apart. You know, with the big gap down here, not looking pretty, not looking like it's going to hold that Thursday low. And it's even affected, you know, the leader of this sector on semiconductor. Had this big tweezers candle, this big tweezers top pattern here. And has rolled over, kind of broke through some support it should have had. And is it going to consolidate here? Is it trying to hold this support now? It's hard to say. But this, you know, this has been the leader in the sector. So worth watching to see if it can start moving back up. If this one can't start moving back up, I don't hold out much hope for the whole sector. Another sector that you know, had some good news, should have done fairly well. That good news for it only lasted a couple of days before it pulled back as well. Now, obviously, you know, we're looking at KWEB, Chinese internet, by the way. Obviously, that was getting no help from the rest of the market. So this may still, you know, find some support in here and continue to bounce. There is a lot. There should be some support, you know, off these two lows right here. It would be really nice to see this move up on tomorrow. If not, we're going to come down and test these lows again, and I fear what will happen if these lows here don't hold. What else? Healthcare. Healthcare is messy. You know, I haven't been liking this sector for a while, but you know, it's rolled over sharply like a lot of the others. Biotech, same kind of deal in here. It hasn't rolled over as much, and maybe it's going to be consolidating in here for a little bit. We'll see. I don't know. I feel like it's going to come down and test the lows of this previous consolidation before it moves up again. REITs have been terrible. Even though REITs are a defensive sector, they pulled back a ton with the rest of the market. Staples, these are a defensive sector as well, and they pulled back a ton too. You can see we had that bull flag that we were looking at in Staples, and that failed to the downside and has continued to the downside. But we should be in an area where we start seeing some support in Staples. Nasty red candle on Friday though. And utilities. Utilities, basically, you know, the strongest sector, aside from energy. The strongest sector in the market, the most defensive sector as well. So, you know, this is not where we want to find our leadership because it is so defensive. But, you know, if you've got some plays in there and kind of, you know, I mean, anybody's got a portfolio or has a well-balanced portfolio should have something in the utility sector. You know, so you're probably doing okay with that. It's probably helping, you know, prevent a lot of other downside, and you will be getting some dividends. One of my favorite utility plays is Brookfield Infrastructure Partners, and you can see that this has had a really nice move recently, but is also pulling back, right? But don't expect to see that pull back too far, and this one pays a half decent dividend. There's also, if you're Canadian, there's a Canadian version of this one too. All right, that's it. That's all the charts I've got to show. So basically, just to reiterate, I'm expecting another choppy week ahead. We're kind of at a bit of an inflection point. We could see some serious downside this week. I suspect we're going to see more chop. And I think that we're going to see some good stuff out of the energy sector. If there's any plays, I think they're going to be in energy. So that's all I got for you. We will be doing ticker talk I've got to get the calendar out, but we're doing ticker talk on Wednesday from now on. And it looks like it's going to be moving from 5 Eastern to 7 Eastern. So hopefully, we did a little poll, and it looks like most people want it definitely later. Later in the day, I guess give them time to get home from work and have some dinner, and then sit down and do ticker talk with us. So looking forward to seeing you there on Wednesday at 7 o'clock Eastern. Enjoy the rest of your long weekend, and we'll see you all in the Discord. And hey, let's give us all a thumbs up. Hit that like button, and if you haven't subscribed, you should go ahead and subscribe. Thanks, everybody.